All right. Hey, everyone. It's Investment Tuesday. And I have to be truthful that it was a little bit difficult to decide what to talk about today because I think people are tired of talking about tariffs and trade wars. And we've already had this mini crash, and then there's been a mini recovery. And the market is like in a little bit of an impasse. A lot of people, I think, are in two minds, which is like, what should I do, Paul? Should I give up on all of those things that felt so important, that were so critical, and felt like I had to buy in right now, like AI and tech, the big tech stocks, and when everything seemed like it was just going to rocket to the moon in one big shot? Or should I go into the new bull market? And certainly, we at ATG Digital have been going big into the new bull markets. And there's a reason for this, which is that I've been doing this for 30 plus years. And I know one thing, which is that the new bull market is never, ever, ever in the old. In other words, you will see that as this new bull market plays out, it's not going to be in all the things that went up earlier. And unfortunately, the vast majority of people are going to have this point of view of trying to buy the heroes, the kings, the queens of the old bull market as they sort of fall off, thinking that they're getting a bargain. And this is going to be a mistake that, yeah, I mean, unless you've been through a few cycles, you just wouldn't know. You're like, yeah, that looks tempting, but no. Yeah, that one, yeah, it's now whatever, under 50, under 100, whatever it is. No. You have to go to where new like money is going, and where there is a demand and supply imbalance in the stock, right? In other words, as new money comes in, there's just no stock available. Nobody's willing to sell it to them for cheap. And so they are forced to bid it up, right? And if you focus on that price action, right, this will show you where the new bull markets are. In other words, where are investors being forced, pushed to pay new high prices, right? And the best way you can do it is you can pick like some time frame. I focus, for example, on 52 weeks. It's 1 year. And I'm always like, well, if there is a set of investors that are willing, have the courage, have the conviction, have the belief to pay for some period of time, right? I mean, prices that are hitting essentially 1 year highs on a semi-regular basis. You go and look at the underlying thesis behind what these stocks are. You have to have some idea of like what's going on in the world. I mean, I don't think you can just go and buy, everything that's on the 52-week high list. You have to have some sense of what's going on in the world. And then you got to connect like, okay, wow, these stocks keep making new highs, keep making new highs. Why? What's going on? Right. And I mean, a bull market in the end is what? Well, it is a market where there's not enough of that particular stock. There's not enough of that particular crypto at the previous price. And so the new investor, the new speculator, the new trader is forced to pay a higher price. If you already own this, these are gains in your portfolio, right? And this is what you want to find. This is what you want to find. And in today's Investment Tuesday, I'm going to tell you about a sector that, if you're following the news about trade wars and tariffs and what has China done? And if you've been tracking this for a bit, you could have kind of seen this coming. And we did at ATG Digital. The three stocks are in our diamond tier portfolio. Two of them have been in them for a while. One is more recent, but they're in this kind of esoteric, kind of unusual sector of the stock market that I would bet the vast majority of people don't know, never heard of, or if they are, they're just beginning to come to it. And then I can also say that they're so small that really, for the most part, you got to be like, like there's no way that a very, very large investor like Warren Buffett, like these companies are so small, someone like him really couldn't buy one of these. At least there might be larger companies out there that do something like this. But these stocks, I mean, they can go up a lot because we're talking about a major transition that's unfolding between, where previously the United States, I'll call it Western countries, have depended pretty much completely. Kind of they gave this business, if you will, to China. Because, well, it's a difficult business. It's a dirty business, meaning that, it causes like environmental issues. It's not, super profitable, but it's really important. There's a lot of businesses like this, right? And the margins were very low. So, of course, the United States and Europe and everybody's like, yeah, you take it. But now, now China is like, you know what? One of the places that, China's like, we can hurt you. And we're going to try and do this because we have a virtual monopoly in this business. Some of you will have an idea of where I'm going. And, hey, I'm going to tease you just a little bit. All right. Wait through and I will tell you what this bull market is and show you three stocks that are in this bull market, which are, they are moving. Right. And they're small and they can go up for a very long time because it took 20, 30 years for us to just hand these businesses over to China. It's going to take much higher prices to stimulate capital, to stimulate interest, to stimulate the profits, to get all this going. So, I mean, these stocks could run for a long time. All right, let me do my regular legal disclaimers. This video and the content from ATG Digital is not investment or financial advice. It's presented to you as opinion. Use it as information, engagement, or entertainment. Whatever you choose to do with it, it is your responsibility because it is your money. All ATG Digital content may contain errors, oversights, or mistakes. Understand that investment operations have significant risks and can lead to the loss of your principal. Investment operations means buying or selling a stock, crypto, options, etc. Loss of your principal means you can lose money. Next, the owners, employees, contractors, ATG Digital, we own, we trade, we transact in the securities I mentioned in this video and all the content from ATG Digital. We do not take money from companies or their managements or from crypto promoters, sponsors, etc. to recommend their stocks or crypto tokens for better and for worse, for gain and for loss. Whatever you get from us is our unique point of view, and it is independent. We publish quite a bit of content, ATG Digital. We do a Substack that goes out every market trading day. I have the Bald Man Speculating podcast that goes out about like every 3 weeks or so. And then I come on YouTube pretty much every week. My colleagues, Dean and Dan and Dean, dynamic duo, they have their own podcast, which is also published. They do their videos. So we are on YouTube in a pretty big way. Then social media, I am on X regularly. We are occasionally on Instagram and Facebook. And then finally, we do run a business. It's called ATG Digital. We sell subscriptions. You go to atgdigital.media. The subscriptions are monthly. They start at $9.99 per a month for the silver tier, which is the most which is the most basic tier. And the next tiers after that are gold, platinum, diamond, purple, and they cost increasing amounts of money. And generally speaking, it goes from like sort of like bigger stocks mostly to mid-sized stocks to small stocks, and then there's options-based trading mostly. And if and when the bull market in crypto really comes back and there's trades, we'll do those as well. All right, so back to Investment Tuesday, and this idea again. Before I tell you about the new bull market, I want to press upon this idea, which I wrote about in today's Substack. That will go out this evening. Actually, yeah, it will go out. Well, I've gone out on Monday evening when I'm recording this, which is that it's such a difficult thing for most individual investors, retail investors to kind of grasp, which is that the market can shift very dramatically and very suddenly, and shift its focus and change its focus to an entire new group of stocks. And it can happen even though it may seem like, oh, you know what, all the articles, all the media says, you should just hold on for dear life and keep all these old stocks. And unfortunately, that's actually not true. I mean, I've been around through 3 or 4 major market shifts, right? I mean, and they always come either as a result of a market event like a crash, or else it's a major financial event. Sometimes these things are the same, or sometimes they're related. But here are some examples. For example, similar to what has happened here, like in 2024 and 2025, in 1999 and 2000, there was an absolute craze for internet-related stocks. They were called .com stocks back then, referring to the internet domain .com, which at the time was the primary domain, and then technology stocks. And if you go back and look, once that bull market ended and then that bear market ended, which was brutal, what came out of that? Well, it was a focus on completely different stocks. I mean, that was the original commodities, China, U.S. real estate and finance bubble market. Those are the stocks that took off between sort of like 2002 all the way until about 2007. And then, of course, we had the global financial crisis in 2008. And then if you look after that, it wasn't, China, it wasn't commodities, it wasn't housing, it wasn't housing finance that led. It was really companies that benefited from very loose financial policy from the Federal Reserve and low interest rates. So generally, it was quite speculative companies. It was very early stage companies. Some of the sort of like the newer internet companies that had been birthed sort of like in 2002 and 2003 that mostly people had ignored but had built enormous businesses. They started to take off. Remember the FANG trade, right? It was Facebook, Apple, Netflix, and Google. I mean, so that was like, so in 2025, we don't have necessarily we haven't really had a market crash. It just feels like we have. We definitely have a major economic and financial event that is going to change market history, financial history, economic history, with the shift from sort of like world, trade organization trade rules where one size fits all, everybody can theoretically, send whatever you want anywhere. That's gone to its bilateral trade and tariffs. Major event, but yet the market's still we haven't had like a crash like the global financial crisis where everything has been marked down 50% or 70%. I mean, the S&P 500 in 2008 was down, I think, 52%, but the average stock was down 70 or 80%. We've had nothing like that. So My view is this, which is that one reason we don't have that is that we have had a lot of new investors, a lot of individual investors, or a lot of retail investors who have entered the market beginning about 2020 in the COVID crash. They have very little market history. It comes in the nature. If you're just brand new to the market, you don't know that much, you haven't experienced that much. And they are there willing to buy sort of like the old heroes, the old kings, the old queens, at sort of like prices as they get marked down and sold out from various portfolios. And this is why we really haven't had a major crash. In other words, retail is buying what institution is selling. Retail is buying what market makers are selling. Retail is buying what dealers are selling. Meanwhile, the new bull markets are in places where, since people are just generally by the nature backward looking, because what's the easiest thing? What's the easiest form of analysis? Well, it's to look at a chart. So if you're going to buy something, you're going to look at a chart of a stock that has done really well. It's much harder to go look at a company and say, well, this hasn't done well, and why might it do well? Or to look at global or macro news and connect the dots to arrive at a bull market like, and here's the grand reveal moment, rare earths, right? Rare earths. All right. Let's talk about rare earths, which is the subject of today's bull market, which is that as a result of this shift from, the one size fits all world that used to exist prior to Liberation Day, and now with tariffs and bilateral trade, the vast majority of the world simply used to order their rare earths from China, right? And China got a monopoly on this business because under the old, trading like regime, as it would be called, like, where, hey, we have, China is allowed to ship whatever it wants to the United States, and we order from them. People under the assumption that there would be free trade, right? And in other words, we can just like, hey, allow another country to hold control of this very critical resource, these rare earths. So what are these rare earths? Let's just quickly go through this. This article, which is pretty, well, hey, it came out 2 days ago. So it's just talking about, how this new front just opened up. And the reason why this article is particularly interesting is I just want to check and make sure that the article is showing. It is. Okay. You see this paragraph here. China has reportedly instructed South Korean companies to stop exporting defense-related products to the United States if they contained rare earth products from China. In other words, China had already restricted or stopped the export of rare earths to the United States. Now it's telling South Korea, which is an ally of the United States, certainly much more an ally to the United States than China, that they can't ship things to the United States. So this is a huge jump, if you will, in sort of like the tensions between the United States and China. And this article quickly goes into sort of like, what are these rare earths? There's 17 elements on the periodic table. I don't know all of them. I know the one that I'm going to talk about that 3 stocks specialize in. But why are they critical? Well, they go into everything from smartphones to satellites, renewable energy sources like solar panels, wind turbines, advanced weapons systems, robotics, and rockets. And that's the stocks that I am going to mention to you that they focus on, advanced weapon systems. In other words, for arms. And China produces most of them. So anyway, the rest of this article talks about, that this is a huge, what is the right word, increase in sort of like the the level of tension between China and the United States, and now China and its other trading partners. It's not going to be something that can simply be sort of cured overnight. And this article goes into some of this. I just want to focus on some of these details here, which is one that China has a near total monopoly on processing, right? So these are referred to as rare earths, but the truth is that the minerals themselves are not that rare. It is the processing that is become, the critical factor. In other words, these resources can, be gotten from Ukraine or Greenland. Now we know why President Trump is very focused on Greenland. But even if you got them from places like Greenland, we would have to send them to China for separation and refining, because that's what China is focused on. There are people who clearly warned about this a decade ago, and various administrations simply chose to instead trust China and trust the old trading order. And here we also get, the explanation. Well, why did we do this? Well, essentially, as this guy says here, Ian Lange from the Colorado School of Mines says, well, it wasn't that profitable. So it was a conscious decision to get rid of a low-value industry. It's also heavily polluting. So we're like, hey, we'll have other countries do our dirty work, right? I mean, so here it goes into more and more. This is a very, very good article that really gets into all of this. And the truth is that we've sort of known about this vulnerability because it was first laid bare, if you will, when China cut exports to Japan over a territorial dispute over a fishing trawler. This was a big international incident. But China, in that scenario, reversed the rules, but people noticed. Okay, I don't need to go into this. Bottom line to this is that we've got a scenario where China, which is the primary target really of the trade war, of the tariffs, etc., because of things like this. In other words, we have allowed ourselves, and by us, I mean the United States, and truthfully for Japan, it's true for Japan, it's really true for South Korea, it's true for Europe. I mean, we're all dependent on China for these rare earths, and they go into things that we are dependent on. Cell phones, robots, pretty much, obviously defense. So this is a big deal. And the other element of this is that it is not necessarily like impossible or difficult to do these things. It is just capital intensive, which is why it's not very profitable. It's also things around which that we have felt that, hey, we can make, somebody else do this quote unquote dirty work and we can just get it. And it requires a change in mindset. It also requires large amounts of capital to come in because, mines are very capital intensive. You can't really shut the mine down. When the prices are low, you can't shut the mine down. It's very difficult to open and shut, a mine. So you got to keep it going even when the prices are too low to justify keeping the mine open. And so bottom line to all this is going to be an enormous, huge cycle for rare earths, right? And it's going to require time. You cannot site a mine. You cannot go, obviously, first you have to find a deposit. Then you have to get, of course, we have enormous, amounts of regulations around something like this, which takes, I'll say probably on the short side, maybe a year. That sounds very low. And then there's the complete element of actually having to put this mine, and to build it, and then to build the processing and refining. We're talking about something that's going to take a few years. It's not something that's going to take a day, a week, a month. It's going to take a few years. And that is probably with, if we're like really pushing it, right? I mean, we're going to have to like start to move a lot faster if we want to do this. So the way that the stock market or the way that things work in capitalism is that the way you signal you want more of something is that you lift the price, right? And by say you lift the price, I mean that, you suddenly, the demand is so much greater that entrepreneurs, capitalists feel, they're like, okay, clearly very strong signal here that there's massive demand. In this case, it'll be from the government. It'll be from the big tech companies that sell us devices and all the people that have an interest in it. In other words, we are willing to pay large amounts of money for you to go and do all this work and do this in our country because, hey, we clearly have an issue with, the way things currently stand for this business. So I remember seeing an article on this rare earths issue. Yeah, so I must have seen it in August or September last year. And we went ahead and we put this stock into the portfolio, U.S. Antimony, right? $373 million company, right? What is antimony? Well, antimony is one of these rare earths. And antimony is particularly critical because it goes into arms. In other words, how in the world the United States allowed itself to depend on China for antimony seems mind-blowing to me, but this is where we are. And whatever the decisions were made in the past, there's no point in thinking about this. But nonetheless, we need our own antimony supply, right? It can't be subject to a company, person that says we won't give it to you because we depend on it for our own self-defense. So I saw this article, and I think it mentioned U.S. antimony. So we put it into the portfolio around September. Yeah, let's see, what date was it? It was September 5th, right? So let's see here. September 5th is about here. So that's like a little bit after that spike. Yeah, September 5th. So around 70 cents, and US antimony is now up to a little bit under $4, right? So that's about 350%, give or take, is where we are. Now, it's not just made like, a 1-year high. US antimony is trading at a 5-year high. This is a 5-year weekly chart. So remember what I was telling you, that the way that things work in the stock market, in our capitalism, is that the price signals there is not enough supply. Please come and make more. Please come and make more. And that is true even in the stock market. I mean, what is U.S. antimony, stock price signaling? It's like, hey, you want to go and start an antimony company and get antimony supplies. We need them now. We need them sooner rather than later. And if you have, you somehow survived for the last 10, 15 years while everybody chose to depend on Chinese antimony, these few companies that are left doing this, well, your day came. Your day came. You've hit the jackpot because you've got whatever, a 5-year lead, a 7-year lead, a 10-year lead. And given everything I've said, which is like, you've got to find a deposit, then you got to site the mine. You obviously have to get it operating. Then you got to, put the refining and processing, multiple years where if you're, I don't know, at least a couple of years ahead, well, you can get antimony and you can, being that this is a critical element, right? And if you can't get it from China, you have to get it from somewhere else. In other words, you're willing to pay a pretty big price. And remember, the tech companies have fat, thick profit margins. They can afford to pay more. So it's a bull market for antimony. It's a bull market for U.S. Antimony Corp, which is what, those charts are saying. Now, Antimony is a pretty big deal because of the fact that it goes into arms, right? I mean, we need this for our self-defense. We need this for our military. So we actually have, a second company which is a little bit bigger. So it's about 3 times as big as US Antimony, Perpetua Resources. They're in the same business. They're in the antimony production business, antimony mining business. And we put that one in as a second play starting about October 2nd. Hasn't done as well as US Antimony, and that's because about $10-ish, and so we're up 50%. Hasn't done quite as well because US Antimony being as small as it was back then. Remember, it's today like a $380 million company, 358% higher. When we put it in, it was obviously under 100 million. So it was a lot smaller, less liquid. But I believe that Perpetua, I mean, this one is also going to do well because, all the same logic that applies to US Antimony applies to Perpetua. Slightly bigger company, but still, we need antimony. They have access to it. They have the ability to get it here sooner than someone that's coming online. I don't know, that's thinking about starting this today, tomorrow, next week. So they have some benefit. And then the last company I'll share, which is actually a pretty recent recommendation, is MP Materials. This is a fairly large company. This is a company that has seen and known about this dependency that we have on China. And they are focused on rare materials across the board. And this is another stock that is, if you look at the 1-year chart, is despite what people are treating like a crash, it's making new highs. In other words, new buyers are willing to come in with new money and willing to pay higher prices for it. The only reason why they'd be willing to pay higher prices for it is because there are no sellers willing to sell it to them for lower prices. So if they want MP Materials stock, they got to pay up, right? And that's the signal that you want. That's the signal that tells you that a stock is in a bull market. In other words, there is a demand and supply imbalance in the stock. It is reflected, it is shown by the fact that as new buyers come in, they are forced, they are pushed, they are compelled to pay high and rising prices. And if you obviously own the stock in your portfolio, those rising prices are gains that you experience. So those are the 3 stocks in this rare earths bull market, which is one of these small secret bull markets that are going on right now, even as the vast majority of stocks are not really able to find new buyers, or if they can find new buyers, there's enough sellers that are willing to sell at a lower price. In other words, there's these secret bull markets. They're secret because they're small. They're secret because, again, it requires you to put together these facts, which is partly macro, partly like strategic, like understanding of tariff and trade wars, etc. And then obviously you got to go ferret these companies out, right? I mean, I don't think the average investor knows about a small company called US Antimony or Perpetua or MP Materials, maybe MP Materials. But I will say, like, there is going to be a point where people are like, rare earths, you got to own it. I mean, I think these stocks will all be, I'll say, hundreds of percent higher by the time that happens. In other words, we're early into this. There's a lot of upside left, in my opinion. So, that's Investment Tuesday. Buy into the secret bull market that is unfolding right now in rare earths. Obviously, you need to be a little careful. You can see, obviously, US Antimony stock is up like this Perpetua is also up like this, and even MP Materials has been rising. So, take your time. As I like to say, buy low, buy slow, and start small. And if you want to be in early on stocks like this, then we are adding new themes, new secret bull markets at ATG Digital. We have just been adding a whole group of stocks for a theme that I call Made in America or Made in the USA. In other words, domestic production. It's very clear that investors want to buy into companies that have domestic production. And we've been adding stocks in there. So check us out, atgdigital.media. And thank you all for watching Investment Tuesday. This is Paul saying thank you and goodbye.